Insurance is everywhere, attached to cars, attached to homes, attached to businesses, sometimes attached to life itself. For most people, it exists quietly in the background. A monthly payment, a yearly renewal, a policy number stored in a drawer or saved in an email account. Unlike many purchases, insurance is something people hope they never have to use. The ideal outcome is simple. The payment is made. Nothing happens. Life continues as expected. For decades, this arrangement felt relatively straightforward. A predictable cost exchanged for protection against an unpredictable event. A small monthly payment protecting against a potentially large financial loss. It became one of the many expenses households accepted as part of modern life. Much like electricity, much like internet service, much like a mortgage payment or rent, insurance became infrastructure. Not physical infrastructure like roads or bridges. Financial infrastructure, a system designed to absorb risk before that risk reached an individual household. For a long time, most people rarely thought about how the system worked. The bill arrived, the bill was paid, and the system remained largely invisible. But over time, something began to change. Renewal notices started arriving with higher numbers. Premiums increased, deductibles increased, coverage became more complicated. The change wasn't always dramatic. In many cases, it happened gradually, year after year, policy after policy, small adjustments that were easy to accept individually, until the total cost began to feel noticeably different. Today, many households are paying substantially more for insurance than they did only a few years ago. Not because they filed more claims, not because they changed providers, not because they suddenly became riskier customers. The system itself has changed, and like many financial pressures, the shift happened slowly enough to feel normal. At first, until the increase became impossible to ignore. At its core, insurance is built on a simple idea. Many people contribute to a shared pool. Only a small number experience a loss. The costs are distributed across the group. The risk becomes manageable. For decades, this model helped create a sense of predictability. Most people couldn't predict whether they would be involved in a car accident. They couldn't predict a house fire. They couldn't predict a medical emergency, but they could predict the insurance payment. The uncertainty of life was transformed into a scheduled expense. That predictability became one of the system's greatest strengths. Households could budget for it. Businesses could budget for it. Entire industries were built around the assumption that risk could be measured, priced, and managed. The arrangement was never perfect, but it was understandable. A person paid a relatively small amount in exchange for protection against a much larger financial loss. For a long time, the relationship between risk and cost remained relatively stable. Then the world around the system began to change. Insurance companies do not simply insure risk, they insure costs. And many of those costs have increased. A car accident today is often more expensive than a car accident from 20 years ago. Not necessarily because collisions have become more severe, but because the vehicles themselves have changed. A damaged bumper may contain cameras, sensors, radar equipment, electronic components. Parts that were once simple have become increasingly complex. Repairing them became more expensive. Replacing them became more expensive. The same pattern appeared elsewhere. Construction materials became more costly. Labor became more costly. Medical care became more costly. The price of rebuilding a house after a disaster increased. The price of repairing a vehicle increased. The price of treating an injury increased. Insurance exists on top of all these systems. When the underlying costs rise, the cost of protection often rises as well. The result is a system facing pressure from multiple directions at the same time. Not because the idea of insurance changed, but because the world it was designed to protect became more expensive. Modern insurance operates in a world filled with information. Vehicles generate data. Smart devices generate data. Businesses generate data. Entire industries now measure risk with a level of detail that would have seemed impossible only a few decades ago. At first glance, more information appears beneficial. Better information should produce better predictions. Better predictions should produce greater efficiency. In many cases, it does. But increased complexity also creates new challenges. The system must process more information. evaluate more variables, model more possibilities. Technology expanded the ability to measure risk. It also expanded the complexity of managing it. The modern world contains more interconnected systems than ever before. A single disruption can affect supply chains, repair costs, medical costs, labor availability, replacement parts. The result is a landscape that is increasingly difficult to predict, and uncertainty has always been one of the primary drivers of insurance pricing. The less certain the future becomes, the more valuable protection appears, and the more expensive protection often becomes. No single factor fully explains rising insurance costs. That is what makes the trend difficult to observe. Most increases do not arrive as dramatic events. They arrive as small adjustments. A slightly higher premium, a slightly larger deductible, a slightly different policy. Individually, these changes appear manageable. Together, they create pressure. Repair costs rise. Medical costs rise. Construction costs rise. Administrative costs rise. The effects accumulate, one layer at a time. The same pattern appeared in many other parts of the economy: housing, transportation, healthcare, food. Each system experienced its own pressures. Insurance became connected to all of them. As those systems became more expensive, insurance often followed. The result is not a single cause. It is the accumulation of many causes, a series of changes that gradually reshape the cost of protection. The vanishing margin. For many households, insurance occupies an unusual position in the budget. It is not optional, but it is also not something people interact with every day. A person may use electricity every hour. They may drive a car every day. They may buy groceries every week. Insurance is different. Its value becomes visible only when something goes wrong, which makes rising costs difficult to accept. The payment remains, even during periods when the service itself feels invisible. At the same time, many households are balancing other financial obligations: housing, transportation, utilities, food, healthcare. Each expense competes for space within the same monthly budget. And like many fixed expenses, insurance does not automatically adjust when other costs rise. The payment remains, month after month, year after year. As other obligations become more expensive, the available margin begins to shrink. Not suddenly, gradually, until an expense that once felt routine begins to attract attention. What makes rising insurance costs difficult to notice is how normal they appear. Policies continue to renew. Claims continue to be processed. The system continues to function. From the outside, very little appears different. But beneath the surface, the mathematics have changed. The world became more complex. Repairs became more expensive. Construction became more expensive. Medical care became more expensive. And the cost of managing risk evolved alongside them. Insurance did not become expensive overnight. The transition happened slowly, year by year, adjustment by adjustment, until the difference became noticeable. For many households, the higher premium is no longer an exception. It is becoming the expectation, not because people suddenly became less responsible, not because the system stopped working, but because the cost of protecting against risk grew alongside the cost of modern life itself. The increase did not arrive with a dramatic announcement. It arrived quietly, renewal after renewal, until a new standard emerged. And for millions of people, that new standard simply became another part of everyday life.